Sell stocks now. I'm your host, Steve Van Metre, and thanks for joining me today. And the message we're getting from the Goldman team from at multiple different levels this past week is you need to sell, because they're saying not only their quantitative machines are bound to start dumping, but other machines are already selling, and they're making other cases perhaps when the market is about to turn bearish. But what I want to look at today's show is perhaps also the bull case, why you may want to take your finger off the sell button, at least for a few days, because we've got some big things happening on Wednesday that could cause the market to go a whole lot higher. But let's take a look at the Goldman case here and pick it apart and then dig into the charts and the technicals, and you can see why perhaps there is plenty of support under the markets that may keep it up for a little longer than Goldman thinks. So let's start out with the CTA positioning. This again from Goldman last week. They note that with the SPX, the S&P 500, down 4 consecutive sessions, Thursday through Tuesday, this momentum is flipped over 1 month of a flat tape. And now when a flat tape means the market just goes sideways, they note 23 billion of equities to sell. And realistically, in a 1 month case, 23 billion, you're talking maybe $1 billion a day. That is, well, a whole lot of nothing. But that's not what they're concerned about. It's where this goes if the market drops. And here you can see over a 1 month down tape, assuming a 2.5 times Sigma move to the downside, now you get 155 billion to sell. Now you get something interesting, because what happened here is all these machines, again, you have to be thinking the U.S. stock market isn't being driven by fundamentals or earnings like it used to be. It's driven by trend following machines. So what happened? The trend moved upward, the machines started to buy, and then they got to the position now where in their programming is kind of in a neutral zone that says, hey, wait a minute, the market's not going any higher, so we can't go up more, and we got to let our tails of our programming catch up to see where we need to go next. And what Goldman's suggesting is the bias is now starting to tilt to the downside. And here you can see this chart from Goldman showing global CTA positioning on a net 30-day change against the S&P 500 on a 30-day percentage change. And notably, as you see the market going down here, what should you expect? Again, in black, the trend following machines to follow the trend. And that's exactly what they're designed to do. Hence why Goldman is saying, hey, you probably want to sell. But as we get a little deeper here, what's notably as we get into their tactical flow of funds report that was just released, what they're saying is perhaps bonds are back. So that's a notable shift. We haven't seen them mention that for a while, other than saying that perhaps that buyers are coming back. But notably, they see this is their reason for it. And this is what's kind of interesting is looking at the 2022 flow of funds asset allocation, what they say is 1.478 trillion big outflows to end 2022. And all they're saying is, look, the reason bonds are likely to come back, not because, we've been talking about the inverted yield curve or the Fed over tightening or the economy slowing down or any rational reason. Their argument is, well, a lot of people have sold, so maybe they'll come back. We'll see. They do note that if the market is going to move, it starts next week, and I agree with that because liquidity in the market is relatively low. There's not a lot of trading going on as big traders are out on vacation. Money does come flowing in January. And one of the reasons you see that is because a lot of year-end, 401k bonuses and whatnot, topping off plans, all these things happen at year-end, and that money shows up into the market in January. So there's a number of things going on here that could do that. Probably the biggest things next week on Wednesday, we get two big key things. We get the FOMC press release, but before that, we get the consumer price index. So if you see the consumer price index start to come down and you get a bit of a dovish Fed, you make the case for why stocks can really go up. Looking at Nomura, their machines move very, very quickly. What we can note is they are likely, based on the latest data that I can extrapolate, near or going to soon to move to max short positions. TD Securities, again, not to be confused with TD Ameritrade, a completely separate company, looking like they will increase their short positions in the near term if prices continue to follow. So let's look at the broad positioning here. What do we see is this S&P 500 failed at its 200-day moving average, just as the CTA is moving into a slightly long position. Any further moves lower, we'll see the CTAs play chase the way down. A move higher, potentially following again Wednesday, could send stocks higher and have the CTAs playing chase to the other direction. So, we've got kind of, this neutral zone that we're stuck in. You're hearing them say, hey, sell, and me saying, well, maybe I ought to wait a few days and see kind of what the market reaction is. Now, let's take a look at kind of the momentum in the charts here, and you can see why there's a ton of support that may actually hold up and push the markets even higher. Let's start out with the S&P 500, and what do we know? Momentum has turned negative, but only over the last 3 days. Now remember, I developed Momentum Timer Pro kind of to follow these machines, and what do we see? 3 consecutive days of sell signals. It kind of falls right in line with what we saw there. We do know we had a buy open on November 8th at 381.11. I'm now suggesting you set your stop loss around 390. I'll show you that. Friday's closing price is at 393. Upside targets and downside targets haven't really changed at all since 2 weeks ago. If you remember, there was no Sunday show, and it was because, well, there was no Sunday voice by Steve. All right, let's take a look at the charts. Remember, we got the volume profile turned on here. This shows us on this one-year chart where most of the shares are traded. And you can see right now price here is just below that big giant block of volume. It's sitting right above its 100-day moving average. But notably, support is right here around 390. So again, you can put your stop loss somewhere around there if you have an open position and want to hold that. And even if this breaks through and prices come all the way back down to 372 and hold, you can then be in a case where you're looking at a inverse head and shoulders, and that would also be bullish. So there's plenty of support here in terms of price volume that could hold this up. And so to me, that looks bullish. Now, the bear case here, so let's make this, kind of what we're seeing as the big bear case is a rejection of the 200-day moving average. And when you see markets peak and then repeatedly reject the bottom side of the 200-day moving average, there's a point where it starts to sell massively off. But this is the first cycle where we've had so many machines, trend-following machines that are in play, and that could keep things up. So here you see the 200-day moving average. The market peaks. It tags it to the bottom, pops over it a little bit. I saying this would be super bullish if it broke over. It came back down. Look, if this gets over the 200-day moving average again, look for this thing to now shoot higher. And there's a big case for that because if you look at historically, and when you see, I think I made this case in the Saturday show, when you see the Fed pause or the market believes the Fed pause, you can actually get a rally almost back or even above all-time highs. So hang on to that thought. Let's look at the tech stocks here. And what do we see? Momentum is negative. Same story, 3 consecutive daily sell signals. Now, right now, the trade will be up, is a little upside down. We mentioned coming in at 282.56. Friday's closing. So we're down slightly, not a big deal. I've still set your stop loss a little lower to give this thing some room to wiggle unless you want to bail. Upside target, downside target, no changes there. Let's take a look at QQQ here. And what do we notice? It is consolidating right alongside here. You can see this tremendous volume over the past year, but look at what's happened. Price came down and buyers were here, buyers were here, buyers were here. Some of those buyers flipped to sellers and then they came back and are now buying along here. So you're seeing consolidation. And that tells me that there's a chance that if you see a break move higher, you're going to flush out these sellers. And again, now you've got room to run to the upside. So again, in my view, kind of a strong case here of why I would probably hold off if I was, thinking about selling and maybe letting Wednesday come along, let the market play out here. Because again, the seasonals through year end, you hear these Santa rallies. Well, there's a reason money flows in at the end of the year. Let's talk about bonds. There's not a lot of change in the CTA positioning here simply because, well, there wasn't. The machines are waiting for their various lengths that they trade over to catch up. And so we're not seeing any movement here. I've noted in the past show 2 weeks ago, this is unchanged, that you need to see 10-year yields fall below 3.1. So if you're looking to take a position here and get the machines behind you, that's where you want to be. Now let's take a look at TLT. We've got momentum is positive, RSI is 60, MACD positive cross, Momentum Timer Pro 20 consecutive daily buy signals. I'm still saying no position here, but if you were looking for a trade, I would say, wait till the 3-month on the sell mid or flip to a sell mid on Momentum Timer Pro. I do want to mention that we will be having a year-end sale on this. So if you've been looking to buy, keep in mind that will be coming probably sometime next week. But I want you to see that this thing really does work pretty well. Upside target just slightly changed. Downside target brought that up a little bit. What you really want to look for in a strong move is this sell mid here on the 3-month to go to a buy minimum. Let's just take a quick look at the charts because there's not a whole lot to look at. You see it got over its 100-day moving average, which I thought it would get rejected at. It didn't. It got rejected a little higher. It's come back. It's going to try to hold the 100-day. If it doesn't, it can pull back pretty far here and maybe catch the 50-day on the move up. You'll notice there's a lot of volume profile sitting up here. This is where the machines will flip and start to accumulate positions, so hang tight on that. Now, what I'm really interested in is gold. And here what we see looking at gold, no real changes. We're seeing them still slightly short, but what we need to do now is see them move over 1825 before the next round of short covering. After that, they start to move long. And some of you are going to ask is, hey, you've talked about some of these gold stocks, these gold miners in shows in the past. Did you buy them? Do you have them? Yes, not only did I buy them on the day I said I would, I still hold them because when you look at the charts of gold and you start to see the machines now looking like they're just about to break long, there's a lot of upside there. There's also the case where the dollar starts to weaken when you see the Fed get to a pause position. So yes, I still have all 3 stocks. I'm still holding them. I still think there's a big upside potential for them. Now let's take a look at gold. What do we see? Momentum is positive. RSI is a 63. MACD's got a positive cross. Momentum Time Pro, 24 consecutive daily buy signals. That is fantastic. We mentioned 2 weeks ago, if you see a cross over 1760 by the next day, that would have triggered on a buy on 1129, or that would have triggered on 1129. You would have bought on 1130 at 163.69. You'd be up Friday close at 167.06. Next upside target, unchanged. They still expect rejection at the 200-day. Let's go and look at the charts here because what we see now is on GLD. We're going to take a quick look at GLD. I know that's what people trade, but we're looking at the bottom side of this. And mind you, the machines are just slightly short here, looking to move higher. So is it possible we'll see a rejection here, possibly after the FOMC meeting? Would not be surprised because then we're likely to get into the case where the Fed pauses. That becomes bullish for gold in the sense it also is bearish for the dollar. Let's take a look at gold futures here. And I wanted to notably look at in the 1-year chart, look where all these shares, all these people that were selling are right here. Should get excited about this. Let's look at the 2-year chart. You see the buyers are all now below this, putting some upside. Do you see if it breaks this roughly 18, what do we have here? Let's see if I can mouse over 1816 level. You've got a quick move almost up to 1890. You've got a case where this thing starts to break out and run over 1900. I like that setup. I like it a lot. And that's why I'm holding those positions because I think there's a ton of upside. Let's take a look at the dollar. Momentum is negative. We've got 24 consecutive daily sell signals. We would hold no position at this time. Upside target slightly above, downside target a bit below. Let's take a look because, again, if you see the Fed in a pause mode or start talking dovish, then the dollar is going to weaken, even though the Fed really doesn't have control over the dollar. But here's this. How about this 2-year chart? Look at what all the buyers and sellers were at. Isn't this very interesting that all the big buyers came in here? So if prices continue to fall, guess what they're going to end up doing as it sits right on the 200-day moving average for UUP is they turn into sellers as they want to cut their losses. Now let's look at the dollar index here, and I can make an easy case where we kind of retest this recent low right around 104. If that doesn't hold, and you think it wouldn't because all those people that bought there, say over the last 2 years would look to sell, but it's not only that, it's the machines here. We also have a case where the machines are in a position where they're learning to start buying other pairs against the dollar, other currencies like the euro against the dollar if prices don't turn around. So here we have another case that we're not there yet seeing the machines trigger, but you've got this whole setup now for Wednesday. CPI comes in on lower. You see the Fed, even though they go 50 basis points, they start to get squeamish about it. You've got a case for gold to rally, you've got a case for the dollar to fall, and you've got a case for stocks to go up and bonds to follow with it. So with that, I'm Steve Van Metre. Thanks for being fans. Thanks for watching. Bye now.